The Self-Employed Guide to Home Loans. More and more Australians are turning to self-employment for the flexibility and for the freedom that it can offer. And whether you run a small business, you freelance, or you just work for yourself, earning your own income and working your own hours, it can be hugely rewarding. While self-employment has many benefits, undoubtedly, it can sometimes create challenges when it comes time to apply for a loan and proving your income. Here's a quick guide. What is a self-employed home loan? If you're a small business owner, contractor, seasonal worker, or freelancer, your situation might look a little different to that of a standard borrower. So, if you need finance, you might need a loan that's tailored just to you. Many lenders won't consider these types of borrowers, either because their business is new or they don't have traditional types of income documentation. Traditional lenders might require the last 2 years' audited personal and business tax returns to confirm income. But for a self-employed borrower, well, this might not be readily accessible. Specialty lenders, on the other hand, they're flexible. They find ways to verify unique financial situations, and they will work with you to find alternative documentation in order to assess your ability to repay the loan. So, whether you have unconventional income, a small deposit, or just need flexible ways to expand your business, there may still be finance solutions available to you. Can I get a home loan if I'm self-employed? Yes. While the application process is a bit different for self-employed borrowers, there are still plenty of options available to suit your individual circumstances. Now, if you have tax returns, tax assessment notices, and business financials going back at least 2 years, you may meet all the standard requirements to apply for a regular home loan. But if you don't, well, help is available. It's important to find a lender who will work with you to understand your business and your individual circumstances. Specialty lenders or non-banks tend to cater to the needs of self-employed borrowers, so be sure to do your research when shopping around. Bigger banks can take longer to approve self-employed borrowers. They may be rigid about their documentation requirements, and it may be less inclined to look at the full picture. It's also important to remember that a rejected application will show on your credit file and can be a red flag on future applications, so be sure to get it right the first time. Can I get a home loan if I'm self-employed? So now that you understand what a self-employed home loan looks like, here are the basic steps to getting one. Step 1. Keep on top of your records. That's really important. Step 2, save for a deposit, and that may take some time. Step 3, speak to a trusted advisor. Then step 4 is to get the pre-approval. Start things moving with the lender. And step 5, find your home. Always the fun step. Step 6, wait for the final approval. And step 7, sign your final loan documents. You'll need to sign your final loan documents to accept the offer and provide any further documentation that the lender has asked for. You may also need to get other loan holders, guarantors, or trustees to sign these too. Now, once the lender is happy with all the documents, they will make the loan proceeds available for you to buy your home. What are normal loan requirements for self-employed people? Each lender has a different requirement and policies when it comes to lending and self-employed borrowers. Big banks or traditional lenders typically want to see the following: proof of self-employment across the last 2 years. They also want to see at least 2 years of tax returns, including the most recent year. Any accompanying financial statements, including profit and loss and balance sheets, they are all to be included. And all your documentation that you've lodged with the ATO, that's what the lenders want to see. Now, specialty lenders or non-banks, they understand that self-employed borrowers can't always meet these rigid requirements, and they are generally much more flexible when it comes to the documents they accept from self-employed home loan applicants. For example, if you've only been self-employed for a year, or in some cases less, you may still be able to get approval if your business bank account or activity statements show strong turnover. The same can apply if your personal bank statements show sufficiently high cash deposits coming in. This is especially true if you are now self-employed but can show steady income over a longer period at a previous employer in the same industry. And if you don't have current tax returns, some lenders may accept a letter from your accountant confirming your current income levels. What are the best loans if I'm self-employed? If you're self-employed, the most suitable home loans are likely to come from a specialty lender who can better understand your individual circumstances. They can offer a broader range of finance solutions combined with a competitive interest rate and flexible loan features. Many traditional banks will require extensive documentation going back at least 2 years. But no matter which lender you decide to go with, it's important. You need to be upfront and honest about your financial situation and choose a lender that's really willing to work with you and understand your story. It's always best to be selective about the lender you decide to apply with and understand how likely are they to approve you beforehand. Every home loan application you submit, it has the potential to impact your overall credit score. And this is why it's so important that you get it right the first time. Also, some lenders will more readily provide ongoing financing support compared to traditional banks. Do I need a broker to get a home loan if I'm self-employed? For self-employed borrowers, the first thing to do is to talk with your financial advisor or your accountant. They can help to ensure that a loan will fit into your budget and also into your long-term financial strategy. That's important. When it comes to finding the right loan, a broker or loan advisor is best equipped to help you navigate that application process. And with expert knowledge about lenders, about products, grants, schemes, an advisor can take the hard work out of looking at your options and get you to yes sooner. That's what you're after. Have any questions? Contact us anytime. We are sincerely eager to help, even if it's just providing more information. Visit liberty.com.au for more information. Thanks for watching.